Well, good morning, everyone. Welcome to Trading a Smaller Account. My name is Barbara Armstrong. I am a coach with Charles Schwab and delighted that you are joining us for Trading a Smaller Account. If you are not following me in the land of X, I invite you to do so. My handle at Barbara Armstrong CS. We have Cameron May riding shotgun in the chat with us today, and you'll want to follow him on X as well at Cameron May CS. We are all now on LinkedIn as well, Cameron and I. And so if you are a person that uses LinkedIn, you may want to follow us on LinkedIn as well. So what are we going to talk about today? Well, I was gone on Friday, so we have 2 trades that have hit targets that we're going to review. We have 4 trades that we put on last Monday that we're going to have a quick peek at. And then I've got a longer list than we can possibly do all the examples for, but we're going to look at adding several new example trades, and we're going to look at when we might want to use which type of strategy. And if you recall at the beginning of this year, we said that our goal for this account was to earn $100 to $200 a week, which given we started with $25,000, some might feel might be a bit aggressive, but so far we're doing pretty well with that. And this is just an example account. So, those human emotions don't tend to come into play to the same degree. And sometimes when you're ahead of the game, you may want to put a little cheddar aside because the expectation is that there could be some weeks or some months where, your number is negative, but we'll talk about that as we go along. I just want to make sure that I've got the chat up here. So let me just bring that over. And, before we get into, the nitty gritty details, know that options carry a high level of risk and aren't suitable for all investors. We have to meet, if you want to trade options, you have to apply for option trading privileges with Schwab, and not all will qualify. So that is something to take into account as well. We use the Paper Money software application on the thinkorswim desktop platform. So if you're thinking, why does Barb's thinkorswim look different? It might be that you're on the not on the desktop platform. So that will have a different look and feel. But one of the differences between a Paper Money account and a live account is that short positions will never be assigned early. That certainly can happen in a live account. And so, we'll talk through, how that, that can color things. Okay. Just one second here. Okay. So in this account, like today, we're going to do a super quick market overview. I used to spend more time on that. The reason we don't do that, I don't do that now, is because 4 days a week at the market open at 9:30 Eastern, Kevin Horner does a really fantastic market overview. You'll want to check that out if that has not been on your viewing menu. We're going to spend most of our day today placing new example trades. We do have a couple of trades to review and a couple to manage. And a question that I've had often when we have a survey is, hey, this trade management that you speak of, like, I am a busy person, and is this going to take a lot of time? Well, let's go and review the 4 trades that we have on. So we placed 4 short put vertical trades. They are all in the green. Now, Walmart, our target on all of these is to get out when we have 80% of our max gain. Right now, we're at 75%. So with Walmart, but we're up dramatically today. So if we were up a little bit or even down a little bit, that might be more of an indication that we might want to exit this position. But we have exits in place for all of these. And today Walmart is up, dramatically, but we don't have a sign that this uptrend, is drawing to a close here. With a short put vertical, we want it to stay above 117. So our review basically of those 4 positions, unless you wanted to go in and specifically look at it, is done. Now, why might we want to look at something? Well, we might want to come and look at something like C or Citigroup, which we have a trade on, and say, well, might it be possible to put a second trade on this stock. And what do we mean by that? Well, we may have done this because it was kind of consolidating, but if we wanted to draw a line, and we all know I'm a line drawer, we now, since Monday, have kind of a diagonal resistance breakout here. And so we might be more bullish than we were when we put this trade on a week ago. And so could we maybe add a long call vertical here at, say, 115 and 120? Now, this one is going to be more directional, which means, we want it to go up, or in order for it to be profitable, it needs to go up. But are we bullish on this? And so, yeah, so somebody's saying, like, I'd take the money and run on Walmart. And that's an individual decision. And no one would fault you for doing that because we've got 75% of our max gain. So if we come and we look at our working orders, here's Walmart. We put an order in to buy it back when it was worth 13 cents and it's worth 16 cents. And where you, like, the thought going through a trader's head might include that, well, does it look like it's going to start pulling back? And right now it doesn't. And so, that might lead us to say, well, let's just hang in. We've got our target. This doesn't expire for another couple of weeks. So we'll just give it another little, we'll be patient. And short verticals require sometimes a little more patience, but would be totally legit to say, like, hey, I'm within 3 cents of my target. I'm going to take the money and run. Cue Steve Miller, as we like to say. Okay, but could we add another trade here and say, on Citigroup, could I come out maybe here, 3 weeks out? Or we could even come out to March. We could give it more time on Citigroup. If we came out to March, we could buy the 115 and the 120. We've got tons of contract volume here. And if you're newer to this strategy, the idea with a long call vertical is we're buying the 115, and to help fund the purchase, we're going to sell the 120. Now that'll cap our potential gain. But when I bring this up here, our strategy with this is, if we are paying 250, what's the most we can make is 250. So there's the potential return of 100%. So what our goal is with these, if you look at our example trading plan, is to make 50%. So we would put a target in here to say, hey, what we'd like to make is $125 on this. So we are going to change our single order to first trigger sequence. We can risk $500 on a trade. So we're going to do 2 of these. I'm going to right click anywhere on here, create an opposite order, and say, if and or when this gets to 375, we'd like to take the money. Now, why aren't we going for the 100%? Well, because often you have to stay in until very close to expiration. And the number of times in my live account when I first started trading these that I'd be up 30%, 40%, 50%, 60%, 70%, and then 60%, 50%, 20%, and like, oh no, now I'm at a loss. I can't even tell you. So I thought, well, what if I was less greedy? What if I set a more modest target? And again, with this, if it gets up to 35% or a 40% gain, and it looks like Citigroup might be starting to pull back, could we exit? Absolutely. So there are some rules that we don't break, like that rule on we're not going to risk more than $500 on a trade. But as far as targets go, we've got a little more wiggle room. It's more of a guideline. I think I told you the story about my son telling me when he was in preschool that he was in love with both his friend Jason and this little girl in the class named Kelly, and he wanted to marry them both. And I said, well, I'm really glad that you've met two people that you like so much. This is really awesome. But when it comes to marriage, and you got a little time because you're only 4, but you got to pick one. And as we're driving up the hill, he said, Mom, is that a rule or a guideline? It's like, oh, how do they start so early? Okay, so that's Citigroup. So there's trade number 1. So somebody said, how about doing a short put vertical? We already have a short put vertical on C that we placed last Monday on Citigroup. And it's doing quite nicely. Thank you very much. Now, another one of the short put verticals that we put on last week, Goldman Sachs. So we did a short put vertical at 900 or at 940. Let's see. Oh, 900 and 895. Sorry, I thought I put that on the chart. Yeah. Oh, and I just didn't click. There we go. So we already have a short put vertical on. We had this inside day, this Harami pattern happening last Monday. And what we, could we say, well, hey, this has continued to be bullish. Maybe what I'd like to add is another one of those long call verticals. And so, could we do that as well? We could. And so if we came out again here to March, and in this class, we tend to bracket, and when I first looked at this, I was going to do the 940 and the 945, but now we're, above 945. So if we did the 945 and the 950, now, is this a big stretch for this stock? When we look at it, well, the ATR on this is like in the last 14 days on average, this stock has moved $23 in a day. So to say, hey, we're expecting it to move, and it needs to move $4.50 and then stay above it. Is that a big stretch for Goldman Sachs? No, it's not. Yeah. So we're going to, if we look at this and we're saying, well, if we could buy this for 190, then what would our target be? Because how much could we make? Well, we could make $5 less what we're paying to get into the trade, or 500 minus the 190. We could make 310. That's over 100%. But you know what? When we buy a call, our gain potentially is unlimited, and we usually set a target. And so we're going to set our target. And what's our target? 50%. So 190 times 1.5. Say, hey, when this is 285, I'd like to take the money and exit the position. And how many of these am I going to do? 2, because 3 is 600 and some, almost 700. Well, we don't want to do that. So right click, opposite order. Oh, things are changing. 228 times 1.5. So now 342. Make that good till canceled. Confirm and send. We're going to put that in our long call vertical bucket. And then we can compare this when we're done to the short put vertical. So we're taking 50%. So Chris is asking a good question. So he's saying, like, why are we taking 50%? We want a 50% gain on what we paid. And so we're going to look at, okay, with Goldman Sachs, we paid 220, so we want to get out at 330. We want to, if we got out and we made $1.10, that would be a 50% gain. Okay. So that's where our target is based. Okay. And this one on C hasn't filled yet. It's saying that this is at the market. So we'll just let this percolate for a few minutes, and then we can come back and see now it's at 252. So we might say, you know what? If you want a little more money, I'll give you a little more. We'll make it 255. We'll put that in our long call vertical group just to get it filled. And sometimes in your live account, you might have to do that as well. Okay. So let's go now and just take a minute. So we've reviewed the four trades, the four short put vertical trades that we had on. And that's like all the trades that we have on right now, because everything else we placed a trade on has hit a target. And, you know, it's been a pretty successful month of January for us because we started with 25,000. We're now at 29,003. And you know, if our goal was to make 200 a week, we would have wanted to make 800 or 1,000 by now, and we're up 3,300. Over 4,000. So you know, it's been a good month. Like, and this is where, if this were in your live account, I'd say this is where you start getting concerned. Why is that? Because this is where people have the temptation to say, like, excuse me, if I say take 29.4 divided by 25, oops, I was just looking to see 29.4 divided, we're up about 15% on the entire account. Or sorry, this is saying 12% on the entire account. And you know, we're saying like we just had one losing trade and maybe 15 trades that have gone according to plan or have been profitable. And the temptation becomes like, hey, these silly ideas about position sizing are for mere mortals, and we're obviously brilliant. You know, and so we should change our position sizing rules. And that's when you should become afraid, very afraid, because that's when there's some black swan event that impacts the whole market. And all of these go from a nice gain to max loss. And then we're really grateful that we position sized appropriately. Okay. So somebody said we did a trade on JP Morgan. We have a trade on JP Morgan. A short put vertical, we're up 53% on that. Yeah. And I think, you know, we place a lot of example trades. So if we come back and look at JP Morgan, that's the only trade that we've done on JP Morgan in the last 30 days. Okay. So we're still in the JP Morgan trade. Okay. But we did have a trade on AMAT. That we placed on the 23rd of January. We bought 15 shares at $319, and then we put in a target of 333. So let's go look at the chart on that. So, you know, we did that on the 23rd on this day. So what kind of trade was that? If it was, our target was 333, it was a 1 ATR trade. And if we come back to our monitor tab and we look at the order history and we look at this, oh, it was a swing trade. Okay, so we were just getting up in, you know, to a previous high. And so when we look at this, how much did we end up making? Well, we ended up making 333 minus 319, 51, and that came out to $13.68 a share. So we made $13.68 a share times, let me just bring up my drawing tools. Sometimes in the morning, they're just kind of a little slow. So that was $13.68 times our 15 shares. So we made 205.20. And, you know, we call that a base hit. You know, and we are happy campers. And, you know, we are up, sorry, I guess I did my math wrong. You know, we're up 17% here overall, but we haven't had a single home run. You know, it's all been base hits and boring little trades, you might say. And we have had a loss, not as many as we often have. You know, so you might be thinking, wow, like this woman is totally brilliant. No, I'm just a regular person and we're placing regular example trades with short-term targets. And I've stolen a line this year from, well, and we've been trading this way for the last 7 years in this class, from Kevin Hinks. We're in the moving business, not the storage business. We're going to get in, make a little bit of money, get out, do it again. You know, in, make a little bit of money, get out, do it again. So the other one that has hit our target, and this one as a return on our investment, you might say like, well, like we had $5,000 working for us to make that, you know, $200. But like we've got $28,000 sitting here doing dinkwakwa right now, doing nothing. You know, it's just sitting in cash. It's not earning us anything. So like to employ that money and as a percentage return, if you want the statistic, it was a 4.3% return. And we were in that trade for 4 days. So like that's not too shabby. You know, it certainly beats a poke in the eye with a sharp stick. The other one that we did was Love. And so with Love, we did a short put vertical. So let's come and look at the charts on Love. This is our airline, Southwest Air. It really did help, you know, that this one had a big move. This was January 30th. So, and we got out of it the day before expiration. Normally, so this was actually a mistake on my part because in our example trading plan, we do not trade short put verticals over earnings. Now with this one, it worked out. But the plan had been when we placed the trade back on January 5th, we placed the trade on this day, our plan had been to get out. And then I flew to Seattle to be part of the getting started with technical advantage analysis and options class and forgot to close it out, but it worked out. And how did it work out? Well, we sold it, this spread, and we were paid 40 cents and we bought it back for 3. Okay. And so we ended up here, we did 3 contracts. So we made 37 times 3. Yeah. Yeah, somebody said rather be lucky than smart. You know, we were fortunate in this one that worked out, but there have been lots of stocks that have gapped down on earnings. And so I'd rather be disciplined than have to rely on luck. You know, it's not about being smart or being lucky. It's about being consistent and disciplined and having a trading plan and following it. Okay. So that's 111. You know, and I'm not counting commissions here. We had 3 contracts. So it's $1.30 per contract to get in and $1.30 per contract to get out. So that would be $1.30 times 6. We had $7.80 in transaction fees on this. Still worth taking the trade, right? Right. Okay. Yeah, ego. It's not a 4-letter word, but I count it right in there with fear and hope in the 4-letter word category in the world of trading, because your ego, you know, it's like we're still these pesky human beings, right? And we have human emotions. And so how do we keep those in check? Well, one of the ways, and I'm going to bring up, if you haven't subscribed to the Trader Talks channel on YouTube from Schwab Coaching, you're going to want to do that. And why do you want to do that? I mean, it's another free resource. And what comes up is whatever's being taught. That's the default. But if you come to playlists, when I started trading, I wanted a recipe. I wanted a recipe to follow for this stuff. And so what I did is I developed trading plans and so coaches, because I'm a product of this education, would go through trading plans. And so I would have a recipe and I followed that recipe to the T for every type of strategy I traded. So if you come to these trade management mini sessions, this is just, I've created this additional content. I'm teaching getting started with technical analysis. So here are a bunch of candlestick pattern bite-sized videos. They're kind of from 2 to 5 minutes long. There's 12 of them so far. There's probably another 6 or 8 to come. But here's a bunch of example trading plans. So here's one for a short put vertical. Here's one for a long call vertical. We've done 2 of those today. We may do one for a long call with a 1 ATR trading plan. We've done a few of those this year. Here's a simple stock one. So, there's a bunch of them in here for your reviewing pleasure. Okay. So I just want to make sure that you guys are aware that those are there. Okay, so let's come back. And sorry, I just somehow lost my view of the chat. So I'm just going to bring that up again. So just give me 1 sec. Because you guys are such a bright group. You're asking lots of great questions. So I'd hate to miss them. Although I know that, Cameron has my back there in the chat and he is doing his best to answer questions as they come along. That might be outside the scope of what I can cover in my 45 minutes here. Okay, just 1 sec, guys. Okay. Coming up. Okay, hold on. Okay. Okay, sorry guys for that little hiccup. Yeah, we just had to restart the share. Somebody's asking how often this class is taught. It's every Monday and Friday at high noon Eastern. Okay, so let's come now. We've reviewed the 2 trades that hit our targets. We've placed 2 layered trades on Citigroup and Goldman Sachs long call verticals. Let's come and look at Boeing. Now, why might we look at Boeing? Well, Boeing, had this, nice bull flag pattern set up, and we had a hammer pattern on Friday. And if you're not sure of, candlestick patterns, you may want to go watch those short videos. And today we have a bullish Harami pattern, which is considered a complete pattern in and of itself. So this is considered to be a bullish entry. Now, what's the appeal of getting something right at the beginning? Well, one, if we're going to, let's say we're going to buy the stock, and why don't we buy some stock? Because we've got $28,000 sitting here in our account. So if we look at this and we say, well, where might we put a stop? We might say, well, let's go 3% below this low here of 229.94. So that'd be around 223. And you might say hello, did you not notice this is a pricey stock, $234? Yeah, but you know what? We can buy $5,000 worth divided by 230, let's call it 235, we'll round up. So we could buy 21 shares of stock and maybe we could just do a swing trade. So we're not putting a ring on it. We're not saying I want to own Boeing till death do us part. We're just saying, we're we're in the moving business. We'll date for a few weeks and see how it goes, and so maybe we put a target up here if we buy this today. And maybe we put that up around that 254 mark. Because up here, like here, it came up to 252. We could even make it like 253. So if we put our target here around this 253. Okay. And so we're going to buy 20 shares. And we're going to buy custom with an OCO bracket because we're going to put a stop in. First thing we're going to do before I forget is make this 21 shares. And then when I click, anywhere else, if I make this a paper clip instead of a firecracker, I don't know why that changed. Okay, I'm going to start this over. It's weird. A custom with OCO bracket. 21 shares. When I click anywhere else, it will line all these up. And then our stop is going to be at 223.04. And our target is going to be at 254 or 253. Get 253. Oh, we're going to leave that as a day. Good till canceled. Good till canceled. Now the system will do the math for us. And by that, I mean, it will say, okay, we're risking $11 a share for the opportunity to potentially make 18. And when we put a stop in or a target, it is not a guarantee that we're going to get out at exactly that price, because if Boeing were to gap down on some kind of extraordinary news tomorrow, we could be out for, a lower price than what we were anticipating. But, if we're saying, if we're risking $11 and we're buying 20 shares, we're still well under the $500 cap that we have self-imposed. Okay. And so this is a swing target. And so this is a stock trade with a target. Now you might say, well, in my account, I have, I don't want to buy stock. My account size isn't, and somebody just, Elizabeth, thanks for setting me up. What if I can't afford to buy the stock? Well, could I buy a call and have the same swing target? Absolutely. But what is the advantage of the stock over the call? The advantage of the stock is that time decay isn't an issue. The advantage of the call is that it requires, a lot less capital. Now, we don't want to risk more than $500, so we'd have to come out of the money here in March, because 545 to 565, that's kind of pushing the limit. If we did this 390 to 420, we could basically set up the same thing. But if it doesn't move within the time frame we're expecting, time decay is like nipping at our profits. But let's give that a shot. So I like the way you're thinking. So we're going to do a buy here, and this is going to be basically a buy custom with stop. We're just going to put it in a little differently. We're going to come to our single order, make it a first trigger sequence. I'm going to right click and create an opposite order. Now, I could have done that same buy with OCO, but if I make this a market order, the only advantage of doing it this way, and there's multiple ways to do most things on Thinkorswim, is now I can just go in and in one fell swoop, put in both our target, which was 253. And then put in my exit at 223.04. Now, if I was doing this in real life, and we're pretending this is real life, I'd then come up and say, okay, my target 253, about 20 bucks above, 223 is my exit, $11 below. Does that make sense? Makes sense. Save. And we're buying one call. Why aren't we buying more than one call? We're not buying more because, we're risking $400 and we could lose all of it. And this is saying, how much could we make? Infinite. But, we don't have an infinite target. We have a specific target at 253. And you might say, well, like, how much could we make? So this is a long call. And we're going to compare this to the stock trade. Okay. So if you wanted to kind of get like just a rule of thumb, and I thought this was the coolest thing on the planet when I first saw it. If you come to Theo Price, we said, well, the market's been pretty bullish. What if it took 1, 2, 3, 4, 5 days to come down? What if it takes 5 days to get back up? So what if by next Monday, it's hit our target? So we're going to the first thing you do is hit reset. So we're going to say it's February 2nd. What if by next Monday, it comes up and it hits 253? So it goes up by, let's say, $19. Would that be $20. Goes up by 20 bucks. Okay, so what might this option be worth? Well, we paid about $4 for it. It would be worth $11.88. Somewhere in that ballpark. If it hit that price, did I change the date? I did, to next Monday. Now, what if it went down instead by $11 and hit our exit? So that would be in our parlance here in this class, that would be like a home run. And if it went down $11, would that hit our stop? Yes, that would have hit our stop. It would be worth about $1.18. So we'd have lost like 70%, 75%. I mean, these are round numbers and these are estimates. It's like, so what is somebody saying, why did I pick Boeing? Well, look at the chart. It's been really uptrending, had a little pullback, came down to the 30-day moving average, and it looks like it's bouncing. If we come and we look at the live news on Boeing, here was another thing. So let's make this a 1-year chart or a 9-month chart. So the last 2 earnings, losing money. This earnings announcement, they were expecting it to lose money and it made almost 10 bucks a share. And so, if we scroll down and start looking, like our analysts raising price targets or lowering them, raising from 290 to 295. Well, our target's 253. Raising their price target from 256 to 285. It doesn't mean these guys are right, by the way. This is just someone who, is paid to analyze the stock. A Citigroup raised their price target to 290, 285, 270. Our target on this is below all of their targets. And so that's why we picked it. Does that make sense? Somebody made a comment about the Seattle event. We were, stuffed, to the rafters on Friday. We had a little more breathing room on Saturday, but it really was a great event. And I love going to these. So we ended up doing 2. We did a swing target with a stock, and then we did a long call. I was going to do a long call vertical on that, and we could. But so if you wanted to compare one more, we could do a long call vertical on that, where it doesn't have to move as much, and we could still make a little money. So like if we came here and we said, okay, I'm going to look at, it's trading at 234. So I'm going to do, we've got lots of volume here, certainly an acceptable bid-ask spread. It's less than 10%. I am going to buy a vertical if I pay 280 for that, it only has to go up by less than $1 and stay there for us to have our max gain. So 280 times 1.5. So our target on that would be 420. So, and how many of these are we going to do? Sadly, only one, because it would be 560. That's a little rich for our blood because we're following our rules. Now, the rule on these is if it goes down 50%, we also get out. So once these are in, we're going to look at these every day. And, and so why, why would I not put in an OCO order like I did on the others? And it's because there can be market volatility at the beginning of the day. And I found that when I was trading these long call verticals in real life, that I would sometimes get whipped out for way more than a 50% loss when the market opened, and then the market would settle down and I wouldn't have been stopped out at all. And so instead of putting in, so I'm trying to give you like real life skills here. So instead of, having an exit in place, if I get whipped out for a 50% gain, I'm willing to fall on that grenade. But instead, I'm just going to come and each day I'm going to just take a quick peek and say, am I close to 50% up or 50% down? So that's how we do it. Okay, so somebody said, can we look at a different stock? Yeah, and we're not going to have time to place these trades, much to my dismay, but we could look at, say, Apple. And Apple has been setting up this kind of pennant pattern, hasn't it? But what did we see after earnings? So it beat on earnings. And what we're seeing in the follow-on is a diagonal resistance breakout. And so, could we do a long call vertical there? But we could. Or could we do a swing trade with shares of stock? We could. And what if it takes 2 months? Well, so what? If we bought the stock, it's not like there's time decay. Like that's not going to be an issue, right? Right. So we'll come back and look at Apple again. But yeah, that's another one that we could have looked at. Walmart on the weekend, it's like, okay, we're definitely going to look at Walmart and then look at what happened today. Like it's just gone up so much. But again, uptrending stock. Do you know Walmart apparently sells 30% of the groceries in this country? Well, a lot of people buying groceries at the Wall of Mart. We had this diagonal resistance breakout, but today it's moved an awful lot, hasn't it? And how about AU? Now, a lot of, precious metal stocks got hit. AU was one of them. And we placed several trades on AU, but today, what do we have? We have an inside day. We have a Harami pattern setting up. And this inverted hammer is saying we may have found support. Yeah. Yeah. So, there's lots of opportunities out there, for us to look at, right? Right. All right. So, and somebody's saying, well, AU is expensive. Well, compared to what? So if we come to the trade tab and there's a little drop down menu, it pays a dividend of almost 4%. Now, one of the differences between paper money and real money is that dividends are not paid in paper money. So this is theoretical. Also, they can change their dividends. So there's not a guarantee that that dividend is going to continue to be paid. And it has a price earnings ratio of 20.5, which, has it knocking on the door of being considered a value stock. So price is all relative, right? Where if you look at, say, a Tesla, their price earnings ratio 392, which means you have to, for every $392 you invest in stock, it generates $1 of profit. Yeah. So Debbie Rock, okay, guys. So, attending live events. I am such a huge fan. I have met friends that have lasted, since 2011, and Debbie Rock is one of them, and she's here today. So hi, Deb. Yeah. So anyway, guys, that's a wrap for today. We placed several trades. We did a long call vertical on Goldman Sachs. We did a long call vertical on Citigroup. And then we did 3 trades on Boeing. We bought the stock. We bought a long call. Both of those have swing targets. And then we did a long call vertical, and we're going to compare and contrast those. And then we looked at AU, Apple, and Walmart. So if you have not hit the like button, I'd ask that you hit the like button. It helps move this up in the algorithms on YouTube so more people can find this content. What else do I want to tell you? Hit the subscribe button. We've already talked about that if you haven't done that already. You can find those example trading plans under the trade management mini sessions. Cameron's going to be talking about covered calls and short puts in a couple of hours. You'll want to join him there. And Mr. James Boyd is up next. You won't want to miss James and the Boydistas. So stay tuned for that. So guys, and don't forget to follow us on LinkedIn and in the Land of X, Barb Armstrong CS and Cameron May CS. Take care, everyone. Have an awesome day. Bye for now.